Hi, this is Steve. Well, we're coming up on the end of November here. I hope everyone had a nice Thanksgiving. I want to present to you a little trend line analysis, just a look at the markets and what's going on. As you probably know, we are primarily cash right now. Interest rates have been rising. The stock market has been falling. Gold and silver have been falling. Trouble in Europe with the debt of some of the PIG nations, as they're called, the PIG, Portugal, Italy, Greece, Ireland has been in the headlines. Concerns now looking for problems to emerge out of Portugal and Spain. Well, let's just take a look at the at a few charts I've put together here to give you an idea why I'm a little bit concerned about markets right at the moment. Okay, let's see if I can get this going. Okay, the dollar, U.S. dollar, has been highly correlated with markets for some time now. The markets have been very positive. We've been in rally mode while the dollar has gone lower. A declining dollar is really a positive for our stock markets and for commodities in general. The expectation was that the dollar would continue to fall with the quantitative easing announced by the Fed. Evidently, that was priced in, at the time of the announcement or shortly after. I think September and October were the rally there was brought on by the quantitative easing announcement. So that being baked into the market at this point, the dollar has reversed course now after a big market rise. The dollar is gaining strength, and it's due to its strong correlation with other markets, we're having trouble. Let's take first a look at the SPY, which is the ETF for the S&P 500. We can see that the trend line and the trend channel has been broken. The SPY is now consolidating in a sideways motion. Markets, by the way, can correct through price or through time. This consolidation is in a wide, or rather a rather narrow range, and we'll have to wait and see if support is broken, which would suggest more downside, or if we break to the upside. And so we don't know what will happen right at this point. Oh, well, I just missed the JNK, which is, I don't know if I can go back or not. Let's see if I can do that. Some current flight, okay. Let's see, yeah. JNK, which is the ETF for high yield bond funds, what I call junk bond funds. And here also we have a broken trend line. Support has been breached as well. All these are negative signs. Of course, I got a signal to sell our last bond, junk bond fund, on Friday, I believe. So we are out of this market. Let's move on to gold. Well, I don't know how much I believe in really, take too seriously head and shoulders formations, but it is a negative formation, and it does at times have a fairly good track record of indicating what may be to come. It's a negative sign. We have a left shoulder developed, a head, a right shoulder mostly developed. If we breach the neckline, which is the blue line across the bottom, that would be a negative sign for gold. We have come a long way to the top side. I have been waiting for a correction. I'll be interested in buying in a significant correction. It never got down to the $1,000 I was hoping for. There's too many people are skeptical of the currencies, and that's understandable. So gold will probably remain in an up mode until the world currencies begin to be viewed more positively. And the same holds true for silver. Silver has been a tremendous performer. We kind of run into a triple top here. triple tops, double tops, traditional indication of the market top in general. We've been bumping it up against resistance for the SLV ETF right above 27. We break that down channel line, we're in for maybe a good correction there too. Well, hopefully we will resolve things to the upside, and some of the negative news will be, kind of curtailed. We have Congress has not extended the Bush tax cuts yet. They're expected to do that at least temporarily. That would be a good sign. It seems that Ireland has maybe gotten some rescue package to prevent them from defaulting. Maybe we can see some positive movement on Portugal and Spain. The Chinese, if they slow their economy down sufficiently, growth would continue, and maybe they would be able to, curtail their interest rate hikes. So you never know. We just kind of watch what goes on, and the simplest way, I have other methods, of course, but the simplest way to communicate this stuff, I believe, is with trend line analysis. And everyone can see, a trend has been, in play for some time, and when the trend starts to give us signs of fatigue, break through the trend lines, break through support. These are all reasons for concern, and I pay attention to these things. I'm most comfortable right now in cash, and we have a lot of smart money people, corporate executives that are involved in selling right now. I think that a lot of the market professionals are in sell mode, and the public is fairly optimistic, and I think that's starting to change a little bit. But you don't want the sentiment to be too bullish. That is generally a sign that the markets are going to take a breather or decline. So right now we have smart money selling, the average investor buying. Sentiment is still very high. Optimism on the part of the individual investor is high. All of these things can be a catalyst for maybe a correction of some kind. Anyway, enjoy the holiday seasons coming up, and I'm watching your money carefully.